Good morning, this is Bakes, Kevin Baker with Bakes Takes. Welcome to my podcast. It's Saturday the 30th, and really nothing happened, so I don't have anything to talk about this week. Oh, no, I do. Hold on. Number one, I'm not from Reddit, and I'm here to help. I'll explain that. Number two, listen to the bells, and they sure as heck are ringing. And number three, congratulations, sell at least some. And we'll explain all of that as we go into this, I hope, enjoyable and helpful and useful edition of Bakes Takes. Why I do this real quick, my sons, they're in their 20s, they're friends, and they would call me up and ask me questions while they were in college, in business school, in business programs, about stocks, the markets, investing, etc. And I've got some scars. I've been through the 87 crash. I was a broker. I've been in 2 mutual funds, 2 hedge funds, 2 institutional firms. The crash in 87 turned me to look at technical analysis, which I deploy a lot here, and it seems to be the aspect that is not covered as much in other podcasts, and that you're telling me add value, so I'm leaning on that a lot more. The fundamentals second, I pay attention to those, I do all that work, and I've done all that work, but I go technicals first, fundamentals second. It's not right or wrong. It just works for me. I read all the things that maybe you don't want to. The Wall Street Journal, Barron's, The Economist. I listen to podcasts that might be off the beaten trail, and I point you to them. I always give attribution. If you want to go and do all that work, that's great. Just know that I'm doing it for you. I eat home cooking. All I talk about is what interests me, what you're asking me about. I have no conflicts. My disclaimer. This is not investment advice. Please conduct and share your own due diligence. I want this to be Bakes Reddit, and I want it to be an interactive forum that is polite and clean, that shares information and hopefully makes money for everybody. All right, starting off with fan mail like we always do, and my wonderful producer, Mike Wilson. How you doing, Mike?
I'm doing all right. And yourself?
Awesome. Ask me about some of the stocks that he's interested in and everybody's interested in, given what's been happening on Wall Street Bets on Reddit. And the first one is GameStop. And my take, as usual, is going to be unique. I'm coming from the standpoint of how do you maximize profits, how do you limit losses given what has already happened. I am going to explain what happened if you haven't heard about this, but my main point is I'm going to use my experience to say if you own the stock, what should you do if certain things occur. Now, the first thing I point out is the weekly chart. And this goes back. This is the monthly chart actually, and it goes back. And I've drawn a line here at $60 horizontally. It touched that in 07. It touched that in 13, and we obviously blew through it on the upside, as you can see in the chart. For those of you listening on audio, I really encourage you to go to my YouTube channel, subscribe, because the charts tell the story, I think, with a lot more clarity than just listening to me. But here we go. So $60 or so is support. That's the first point. The next chart is the daily, and I've got different levels here. This is obviously a long-term base that it spent a year plus under $22, and then the Reddit phenomenon occurred. I'm going to go through that in more detail, but I want to get these numbers in your head so you can think about it. If you've got a Robinhood account, Fidelity account, what have you, as to how you have a strategy now that it's Saturday and you're dispassionate and rested, and then you can deploy it at some point Monday or over the course of the week. So we blasted off, hit 483. So some guy is long, has a buy ticket that's filled at 483. The next day, the high was 413. That to me is resistance. I want you to think of resistance, if that's a new term for you, as a ceiling. It doesn't have to be the ceiling, but it's a ceiling. So it's levels where it's going to be more difficult to break through to the upside because you have that prior trading activity. You have people that are underwater at 483 and 413, and they're probably going to be selling to you if the stock goes above. Stock closed at 325. So and I've never seen this before in my life. It might have happened. I haven't gone through the almanac or anything, but in 2 months you've gone from 22 to 325. It is unbelievable. And, God bless the guys that were right, and we'll go into why this has occurred. The other numbers I want you to have are 250, 150, and that $60 support. My normal sell discipline would invoke the 200-day moving average. That's a waste of time because that's at 15 here. That's the kind of moonshot this has become. My point being, support is the floor. If you break 250, you're going to the next floor at 160, 150, and then if you break that, you're going to 60, in my opinion. Again, there are no absolutes, especially with this crazy action we're seeing. These are probabilities. This is prior experience. I'm going to be watching these, but I want you to have these in your head as to, I don't want you to give profits back, and I don't want you to lose a lot of money, and I hope I'm going to be helpful with this. So I'm not going to bury the lead. If you can, and you have profits, I'd sell your original investment, or at least a piece of it, and let the rest of the winner run. You can do with that what you will, but that's, and I'm invoking my what I did with GBTC, the Bitcoin. When you make a lot of money in a short period of time, take the original investment off the table, let the profits run, and it lowers your blood pressure, at least lowers mine, and then watch the trades and closes below and above those levels that I just mentioned, especially trades. Especially closes. If it closes above 483, game on, and sky's the limit. If it closes below 250, game on, and we're going lower in my view. So that's and now obviously those are wide swings. I'm not minimizing that, but I want you to have a game plan in place while you're sitting here without the blue and green, the red and green flashing in front of your eyes as trading goes. Now, fundamentals and valuations don't matter in these stocks for right now, in my view. And some people are saying they don't matter in the market with interest rates like this. That sentence scares me. I don't want to anger the stock market gods. But here we go. GameStop, the market cap's $22 billion. All right, it's exploded in value in just a short period of time. Revenues are down 30% last quarter. They lost money, lost less than people thought, but they lost money. And here's a date to put in your calendar and circle. March 25th is the approximate conference call for this. That is going to be a Donnybrook. It is going to be unbelievable to listen to that conference call. So mark that in your calendar. That's going to be great theater. But so is it undervalued? It doesn't sound like it. Money losing company. When was the last time you went to GameStop to sell a game for $7 and get ticked off? Did you buy a console for Christmas? You're probably done. So, I don't think the business is all that great. Maybe it's not terrible, but it's not all that great. Balance sheet, 1.16 in long-term debt. Cash is $445 million. So that's $715 million net debt divided by the number of shares. We'll get into that too. 69 million shares gets you to a little over $10 a share in debt, not cash, in debt. Now it's likely irrelevant because they could raise money in an afternoon with this elevated stock price, pay off the debt. You've got a whole different picture. But the real story is the shares short. I'm going to go into this in more depth, but the number of shares short versus that outstanding number. Okay, 69 million outstanding. There were more shares short. 71 million was one number I saw. They're flying all over the place. The services almost can't keep up. It went down to 61, and now I'm hearing that it's 55 million short as of the most recent calculation, which is a monstrous number. I haven't seen that before. It might have occurred, but boy, not in my memory and not in my experience. And it is obviously fuel for this fire. I'm going to do the same for AMC and AMC Entertainment and BB, BlackBerry later, but I want to take this moment. Please share this with your Robinhood or Reddit rebellion friends, and send your other stocks, your ideas, and I'll offer a similar strategy for them as well. And I could be wrong about a lot of this, but I've been doing this a while, and I think I can give you points where you ought to be paying attention. Mike's going to be helping out with me to provide breaking news to you via Zoom in the future, so please stay tuned. Now, I don't want to be simplistic, but I want to make the complex simple. But I've had a lot of questions about this. What is a short? And the way I describe it is it's the reverse of buying low and selling high. It's reversing the chronology. You sell high first, and then you buy low. So let's use the Melvin example, the hedge fund that's getting its head kicked in the case of GameStop. Let's say they got this exactly right, and Melvin borrows the stock at $60. They go to Fidelity, T. Rowe Price, mainly the prime broker, but they go out and they borrow the shares from someone who has it. It pays them obviously a fee, an interest rate, and then they later buy it back in, cover at 4, and they take that 93% profit. That's the decline, and that's how it should work. So you just sell high, buy low, and take that profit and put it in the bank. I guess they thought it was going to 0 because the stock was at 4 for a long time, and they were wrong. And Wall Street Bets and the people on there figured it out, and now they're going and applying the GameStop methodology, if you will, to other stocks, which we'll get it into. There's a graphic here which basically shows what I just said, but I think it's a good, simple way of seeing how you sell stock short and why it exists and why it works. A margin call, your broker, if you have a margin account, has a collateral requirement that you have. You have to have a certain amount of cash, certain amount of stock, so that when you borrow to take shares to sell short, you have a way to close out a losing trade. When the stock goes up and moves against you, they do what's called a margin call, so that you have a minimum maintenance margin. You can either put in more cash, cover the short, or put in addition, or sell your existing longs. Those are the options, and frankly, they're all being utilized right now as we speak in this example. There's also on the YouTube channel another great graphic to cover this, but that's what a margin call is, and it's why you have the urgency for many people who are long the stock short having to buy when they don't want to, and certainly not at the elevated prices that they've had to do. All right, so here's my take. Likely reason the stock market's down this past week is that you've had these margin calls result. The short squeeze has caused margin calls, and they've had to go to non-Reddit rebellion stocks to raise cash. So you saw things like Apple and Microsoft down in great earnings because people had to raise cash to take care of their problems in their GameStops of the world. So a short squeeze happens when there's a big short interest and it's very lopsided. Some positive news occurs, and then positive buying occurs on the long side, buying the stock long, and then it usually takes the stock through technical levels, and then it feeds upon itself. And then the forced buying of the people that are on the wrong side short just creates indiscriminate buying. And then, of course, the Reddit community comes in and presses it really, really hard in very vocal fashion. So I hope that's helpful. I hope I've explained it. Give me feedback. Tell me what I need to clarify on future shows. Now, Mike asked about AMC, and I did the same thing where I go back and look at the history. And at 2026 is the weekly high that just occurred. It's also, not coincidentally, where you see resistance. It's a lid. It's a ceiling that's occurred in the past. There's a lot of people here that own the stock at 2026 that are more willing sellers than they were at lower levels. And my eyes drawn to this. I think it's going to be tough to get through. I could be wrong. The options activity could exacerbate this. But right now, 2026 is a line in the sand that I'm looking for. The next one is the daily, and the stock closed at 1410, by the way, which also shows some resistance from 2013, 2012, right around there. Now, the support is here, and I've got a line driven on the daily, 771. Now, that's a double, 7 to 14, and we can do that math. I guess 1326 was the close when I did this. But it's the same kind of thing. That's going to be support on the downside, at least initially, if this buying frenzy comes to get tired. Now, here's something that I'm in the habit now of going to Wall Street Bets, and I think I bring this up because I mentioned before that GameStop had a very, very high short interest, especially relative to the float and to the outstanding. And there aren't many of those. And a lot of people are getting on these forums and saying this is the next GME, but they're not the next GME. AMC doesn't have anywhere near the short interest that GameStop showed. So you have about a day short on the case of AMC. You don't have the fuel. You don't have the reason to buy as feverishly because you're wrong on the short side. AMC was supposed to go bankrupt. They got a lifeline, raised $900+ million, and then said we're not going to go bankrupt, and that was enough to boost the stock, and it should have. Maybe not this much, but it's a positive event. That was a surprise. But you're not going to have a short squeeze of any sort of the magnitude of GameStop, in my opinion. So here's my take. Again, if you can, I'd sell the original investment or a good portion of it. I'd let it ride. If it breaks above 2026, then there is more covering fever that has to occur. If it's below 771, and I know these are wide ranges, but I'd like to have you with one sheet of paper that you have in your pocket, so that if this happens, I will do this. Maybe even put in the stop loss ahead of time, so it's automatic if you're not around your screen. So let's do the same thing with BlackBerry, please. The resistance on the monthly is 28.77, and you can see this. It's this zenith, and that's when it gets tired of this initial rise up, because there's people there that are selling the stock and beating it back down from 2011 and 2012. So I doubt it gets there again. I could be wrong. 1410 are prior highs here as well, going back 8 years. So it's a reasonable resting point as we go into the new week. On the support side, 969. That's my number. It's the prior high daily. If it closes below here, that's a problem. And as I've mentioned before, parabolas usually correct 80% plus of the move. Might take longer than you think. The parabola might not be over, but when you have a very steep rise, the corrections are very, very hard and faster than the ascent even, which is hard to imagine given the rise that we've seen. So I'd sell the original. This is my take. I'd sell in BB. I'd sell the original investment. I'd let the profit ride, and above 28.77, especially, you're going to make some more money. And if you see anything 969 or lower, get nervous and get ready to sell. There. I posted here Chamath Palihapitiya's interview on CNBC. Every time he's on, he says more in 3 minutes than most people say in 30. And so this is worth 3 minutes of your time. I recommend it highly. He, if you've done it, it ain't bragging. So he bought calls, 155 calls for $100,000, made $500,000. Spoke pretty eloquently about the disdain or the anger that the Reddit rebellion people have against the Wall Street establishment, and they do want to stick it to them, and it's working thus far. More on that later. But he made $500,000 and then donated to Barstool Sports Fund. which I think is terrific. Again, if you have Robinhood or Reddit Rebellion friends, please share this. Send your stocks to me, Bakes at BakesTakesPodcast.com, or tweet at BakesTakes_, and I'll give you my best view of locking in profits, hopefully, or at least controlling the losses. John, you asked last week about Facebook. I was neutral on the fundamentals and negative, but not violently so, on the technicals. And this is the chart that I showed in that show. And then the next one is after earnings. And they didn't care about earnings. And I just bring this up to say, this stuff works a lot of the time, not all the time, but you had earnings come out, they yawned, and the volume is picking up on the downside. And I think part of that is big liquid name. I need money to cover my margin call and lessen the pain of what's going on in GameStop and AMC. And so they go reach for the liquid Facebook and sell it. And again, I asked who the incremental buyer was. With a 1.42 short ratio, you didn't have shorts that would have to cover if the stock took off to new highs. And so it's rolling over. Watch the 200-day moving average at around 252 and get more nervous if you see a close below that. I hope that helps, John. And welcome again to the show. Oh, my themes and groups. I keep myself to the fire. Here's my account, small one. But I'm down 1.4% year to date. That sounds silly, given I could have thrown a dart at Reddit and made a ton of money. I don't do individual names. I do ETFs. That's just my preference to be more diversified. Silver didn't work out. SIL, the silver miner ETF. I cut my losses at 15% in the 200-day moving average. I am gone. I do not want to see anything really red on my screen. So the remaining ETFs in uranium, cannabis, Bitcoin, etc., are all green. That's what I want to see, and I'm looking for new opportunities. It's the weekend and the turn of the month. I'm going through 2,000 plus charts, and I'll report back next week what I find. So stay tuned for that. This feeds into a question from Charlie. The Grayscale Bitcoin Trust. It isn't Bitcoin directly, but it owns Bitcoin in the underlying portfolio. And in response to a reporter's request, I opined that my guess is we stop around, why Bitcoin was going down. And I said, my guess is we stop around the 50-day moving average and support at 27.59. This is the chart we put up either last week or the week before. And then let's go to the new one, Mike. I mean, look at this. It comes down, and within a penny, it hits that it pays its respects, if you will, to the moving average. Notice the volume's pretty light on the down days, which I like, and then resumes its uptrend. Now, could we retest? Absolutely. This doesn't work all the time, but I want to show you, some wins here that market behavior, repeats itself or at least rhymes. And in his question, he said, Bakes, he said, this is a clear bullish signal. And, what's it look like? Well, it looks like this. And so here, I really want you to go to the YouTube channel. Look at the arrows that I've drawn here. Sorry. The prior high was 1478. That's about a year-long base where it's just, moving between 6 and 14 pretty much. And then October 2nd, I noticed, look at the volume. And there's an arrow there, 16 million shares, 3 times normal, going to the upside. So I, pay a little bit more attention. Then October 27th, 1567 is the price. It's a new high, again, on big volume. And then it never looked back. It was 1567 to 40 plus, and now it's 34 plus. So that's a pretty chart, and I can't almost draw them up any better than that. That's what it looks like, and I'm looking for these all the time. And I hope I share them with you, and I hope we all profit, and I hope I add value in some way by bringing my technical analysis, knowledge, and experience to you. You also asked about non-Bitcoin ways to invest in Bitcoin, and you use the example of picks and axes like the 49 gold rush, and I don't have a Levi's that I can point to. Levi Strauss made more money than all the miners because he was selling them the jeans that they wore. That might be urban legend, but I'm going to go with it. And you can invest in PayPal and Square. It's a small part of revenues right now, so I don't have any direct ways that here's a Bitcoin mining company that directly is involved in the Bitcoin theme. If you have them, let me know, or anybody else there finds them. I didn't find anything in my my initial search. I'm always looking and I'm always listening. You asked about Janet Yellen and what she means for markets and stimulus, I believe, was the other part of it. She's obviously a Biden advocate and will be a proponent of the stimulus bills and sway senators and representatives that need to be swayed, I believe. She was a dove on the Fed. She's going to be a dove here, meaning easy money as far as the eye can see. I think that most officials, political people, elected officials, I think they have very little impact on us as investors. I've always said that. I said that about the president. I've said that about every president. And I'm going to stick with it until someone proves me otherwise. But that's my story on Janet Yellen. I wanted to be responsive to the question. And keep them coming, Charlie. I really appreciate it. So here's my take. Bitcoin and crypto, the uptrend is intact in this era of money printing. Podcasts of the week. One of my favorites. This is the All In podcast. Chamath Palihapitiya, Jason Calacanis, David Freeberg, and David Katz. And I might get that last one wrong, but the four besties, if you will. And the fur was flying on this one. I really recommend it because I won't go through all of it here. But Chamath clearly has a view and knowledge of the chronology of events that have led to the melt up in GameStop and other stocks like this via the Reddit thread, if you will. So at 3 minutes, he goes through another 3 minutes of how this happened. But some controversial things. Jason is an angel investor in Robinhood and is a proponent, and took umbrage with a lot of things Chamath was saying, like Robinhood was insolvent and they weren't truthful about that. They lied about that on CNBC. They cost investors millions by shutting off half the trade. You can buy, but you can't sell, that kind of a thing. MFers should go to jail. I'm going to keep it, a family show here for now. Deep effing value. Oh, here's the chronology. Basically, I'll run through this real quick. In June, Deep Effing Value post their initial trade of $50,000 in GameStop. It's now $22 million. It's a good day at the office. And Michael Burry comes in. That's Christian Bale from the Big Short movie. And talks about many stores being free cash flow positive and adds to the bullish fervor. Ryan Cohen comes in, the Chewy founder, buys 10% of the company, talks about launching a digital strategy, which he clearly has the chops to do, and gets 3 board seats, himself and 2 friends. And then it's revealed that at one point it was 140% short. Didn't know that could happen, and frankly, it shouldn't, and they're going to probably fix that, is my guess. And then Melvin, the aforementioned hedge fund, went long puts, betting on a stock decline after being short for 4 years, as recently as November. And then the Reddit people just piled in, and they all came in with buy orders, and what you have is a melt-up of epic proportions. So here's my take. I would have money you can lose in Robinhood. They needed that $1 billion last week to stay in business. They're clearly going through growing pains and stress tests. They're restricting more stocks after the close on Friday. They added at least 35 more stocks. I thought it was 50. Some of them are listed here. So be careful of entering trades that you can get out. And you might want to have a safety valve account, Fidelity or elsewhere, that seems to be staying open when Robinhood closes. Just be aware that and create position sizes that if they lock you up, it's not going to kill you. There we go. Reporters of the week. Greg Zuckerman, great reporter at the Wall Street Journal, reports that Citron Research is going to stop publishing short reports. He's been doing this for 20 years. Now he's getting death threats. His personal information is being put out on Reddit. His accounts are being hacked. Social media accounts are being hacked. They're harassing his children. And he in essence said, it isn't worth it to me. I'm not doing this anymore. I'm done. That's a bell, folks. When you have an extreme that say 20 years, I'm done doing what I do best, that's a sign that it's probably time to start adding some shorts. I'm not recommending that directly, but it's a bell. We're closer to the end of this thing than the beginning, in my opinion. I've got some other bells that are ringing. I'm in a bar the other day. 5 people are bragging with their phones out and sharing portfolios on Robinhood about how much money they made in the aforementioned GameStop and AMC and BB. 2 nurses, 3 construction people, wonderful people, but they weren't talking about that when the stock was at $22. And again, it feels like it's the end. CNBC is another bell. They in essence spent all of Friday talking about the Reddit rebellion, and then they said, wait, there's more. We need a 2-hour special at the end. The 2-hour special of CNBC usually marks tops. Not exactly, not precisely. Could go more room to run, but it feels like the end of the run, or at least close. Other things, okay. So here's my take. Listen to those bells and other things to take into account. Congress, they're going to weigh in, and that's not going to be a positive at all. Secondaries, all these companies should be printing stock, in my opinion, and a lot of them are going to do it. And I don't know if Reddit has the buying power to absorb it all. I doubt it. That's just my view. I have no way to quantify that. Hedge fund response. The midnight oil is burning. It's all hands on deck. It's Saturday right now. I'll guarantee you that everybody's inside of Greenwich and their New York and their San Francisco offices saying, how do we get out of this? Do I start a rumor that GameStop causes cancer? I'm kidding, but not by much. I mean, you do what you have to drive the price down. Not saying it's right, and it isn't, but it happens. And then just gravity. Now that you have the weekend, you say, okay, is GameStop worth $22 billion? And most people, I think, are going to say no. And as soon as I see some weakness, I'm going to pull, pile in on the sell side. And all right, let's go to newsletters of the week. This is a wealth of common sense from Ben Carlson. He's with the Ritholtz Wealth Management Group. And I know this history, but it was striking to me to see it all in one list. So these are 9 uncomfortable facts, and I give it to my Robinhood friends, my Reddit friends, and just my friends, just for perspective. The stock market, the number one, the stock market was underwater from 1929 to 1954. Obviously, that was the crash and the Great Depression, but that's a long time. Total return, this is 2. Total return from early March 97 through March 09 was 5%. Nothing to write home about. Government bonds beat the stock market for 40 years at one point, going through February of 09. Number 4, from 69 to 81, the stock market underperformed inflation by more than 56%. Number 5, gold destroyed the stock market in both the 70s and the early 2000s. Number 6, in 30 of the past 93 years, keeping your money in a savings account would have beat the returns of the stock market. Number 7, over the course of 70s and 80s, Japanese stocks outperformed U.S. stocks by more than sixfold. Number 8, the U.S. stock market has experienced 6 crashes of 40% or worse since 1928, and the U.S. stock market has fallen by 10% or worse in a single year 11 times since 1928. So stocks can go down. I'm not saying it's going to happen Monday, but it does happen. I hope that gives you some perspective. I hope I've added some value. Okay. Please also subscribe to my Bakes Takes YouTube channel. The audio is the same, but the charts that I reference are on the screen. Please follow us on Twitter at BakesTakes_ and other social media. Please use your voice memo app, tape your questions, and email them to me at bakes@bakestakespodcast.com, or write if you prefer. I'll keep you anonymous if you'd like. Thank you for listening. Mike Wilson is my producer. Have a great week. This is Bakes. 2 things for you. Most inspiring speech. My beautiful wife, Suze, sent this to the boys and I. Great moving message. You're really going to like it. I recommend it. It's about 7 minutes, and it'll brighten your day. Trust me. And this will also brighten your day. Much needed levity. Ron White, I got thrown out of a bar. It's hilarious in my opinion. And as he would say, thanks for playing along. I'll see you next week. Take care now. Bye.